Happy summer, everybody. Welcome to Monday Call. Thanks for being on. Last month, we started a little new little addition to the Monday Calls. First Monday of the month, we have Ben from ECA. Just give us kind of the state of the state for insurance and anything that's been changed or anything we should be concentrating on. So Ben is on today to give us his update. Thanks, Ben.
Great. Hi, everybody. Just a couple of actually one new product update. John Hancock came out. They've changed their Universal Life product. Now they have they added Vitality to it, which is basically a general health or fitness program that they've attached to it, where people can do things, record their health, record their physical activity, and do nutrition things to get a discount on their insurance. What I've seen so far, I haven't seen too many new cases come in with it, but it can look really good for certain ages. So that replaced their Protection UL product. Right? It didn't replace it. It's just it's now the way that their Protection UL product is issued. So if you have questions on that, call over and we can discuss that. The other updates, we've still got backlogs at Trans. Mass Mutual is slow. Lincoln National's a little slow. So if you're writing those carriers, just know it's going to take a little more time. Carriers that are really good on processing right now, Principal, Prudential, Banner, they're all passing things through very quickly. For Index Life, Allianz and Minnesota Life are both good to work with. So those are going well. Other things I just wanted to touch on real briefly. I mentioned last week, sometimes if you have quick quotes or questions on medicals, you can send those over to me. I wanted to just talk real briefly about one that comes up. I get probably 5 or 10 cases a week on diabetes. So the questions you want to ask there are, main things we need to know is how old the client is now and how long they've had diabetes. So we can either have data diagnosis, or if you know they've had it 2 years, 1 year, 6 months, 10 years, however long they've had it. If it's type 1 or type 2, mostly you're going to run into type 2. So, and if it's adult onset, it typically is type 2. The other main things are what their degree of control is. So the biggest thing with diabetes is controlling blood sugar, which is measured by the A1C. So if the client knows their most recent A1C numbers or what they've been in the past, that's going to be important to know. Good control for A1C is typically under 7. So if it's under 7, we can get them some credits. And basically the general way is, depending on age, younger is going to be higher rating, older is going to be better. And older being above 50, that's going to be a more favorable case where it's going to be very easy to get to a standard rate with some credits. If they're younger, it's going to be much tougher because typically diabetes starts around table 2 to 4. And you can get up to 2 tables for credits. So if it starts at table 2 and you have good control, then that's usually a case where they can get standard. If it's not well controlled, if they're still doing okay, you're probably looking at a table 2, possibly a table 4 rating if they're younger. So that's just some general things there. If they have other things like neuropathy, problems with optic neuritis with their eyes, any other issues with protein in the urine, build can be a factor. Heart disease is one that'll actually add extra rating onto it as well. So if they've got any of those other features, then they're not going to be able to get to the standard rate and they're going to be rated. So if you have any specifics there where you come across that, just send them over my way, and it helps if you have those other questions up front. But if you don't, I can tell you what to ask the client and get a good rating, good feel for what the rating might be. Other things, if you just to throw one out there, just that you might come across. I know with some clients, in the past, they've always been declined for AIDS. We actually do have an outlet through a reinsurer that's able to get some AIDS patients, if they're treated and doing good, and basically the disease is in remission, able to get them offers starting at table 8. So if you have a case like that, it would be a good thing to maybe call over and we can talk about it and find out what, if we can get something for that client. So it's not necessarily always it's going to be a decline for AIDS now. They do have some pretty good treatments out there that can basically knock it out, and in the best case scenario, we could be looking at table 8 on those. But it's going to be still very limited as far as what clients they will take on. I do have the rough outline from the reinsurer of what they're looking for, and then we can go through those questions and see if it's going to be a good fit. Other than that, if you have any other underwriting questions, feel free to send them my way. And anything else on new business side, just let me know.
Super.
Thank you.
Thanks, Ben. Appreciate it.
Yep. Have a good day.
You too. Oh, wait.
Yep.
I got a question here. What is the reduction in premium for sending in healthy statement? In the healthy statement, I think it was for your first policy you were talking about.
Okay. For the Vitality, I believe if they're it depends. They have different levels in the Vitality program, and that gets them a bigger discount the more healthy stuff they do, for lack of a better way to explain that.
Okay.
So they can get, I believe it's up to a 15%. It may be a little higher than that too, but I think up to a 15% discount on the cost of insurance.
Cool.
And I believe that when you run the illustrations, when a marketer runs the illustration, they can actually show the discounted premium there.
Perfect. Thank you very much.
All right. Thank you.
Okay. So we'll get on with our show here. First thing we want to talk about is 5Q and ECA. We have a small group here, but it's amazing that we have 2 Jeffs and 2 Melissas. So just wanted to clarify. There's Jeff Freeberg versus Jeff Van Grinsven at ECA. So Jeff Freeberg helps you with your 21s and coaching questions, and then Jeff Van Grinsven is our expert in the annuity side that helps you with your products and solution meetings. And then we have Missy, obviously, it works with us here at the 5Q office, and then our new fantastic addition is Melissa Hoffman at ECA, and she helps with contracts, administrative stuff, and things like that. And she goes by Missy as well, because they're both Melissas, and Missy goes by Missy as long as I've known her, and I think Melissa sometimes goes by Missy. So just wanted you guys to be clear. Unfortunately or fortunately, we have 2 Jeffs and 2 Missies, so that should help to clarify. And then we get these emails all the time from advisors, but I just thought I would share a couple from last week. This went to one of my favorite advisors, and she has been doing these breakfast clubs for the last, I think, 2 or 3 years. And she gets, once a month, she gets together. She has an ongoing breakfast club once a month where she gets professionals in the community to talk about what's happening with their professions. It might be a banker, it might be an ophthalmologist, it might be, so she's constantly bringing new professionals in to talk at these breakfast clubs, as well as talking herself. But you see this one here, this email said, just want to thank you for your breakfast club. It's encouraging gathering and a way for clients to connect with you and reach each other while encouraging new potential clients. The downturn is coming, and the breakfast club is a lifeboat to clients' method coping with rough waters ahead. Place to address the worries and many at one time so people do not panic. I'm so glad I'm no longer with a client of Wells Fargo. My ex-financial advisor has become party to paying off and using the local clout to influence the poor city council decisions. These poor city council decisions are damaging the financial impact on all of us taxpayers. Morals are more important than money, and serving people is more important than making a quick profits. That can be gone in a sudden drop of the Dow. Thank you for being and offering your clients friendship while offering a chance of financial security. I mean, how many of you guys would like to have those kind of emails coming in? So kudos to Pam for that. And then this one was from Rick, where he basically had sent out, he was doing basically a combined lunch and learn. So he sent out, says, Mike, invitations you provided, which is the outside the box invitations, is working better than my wildest dreams. I sent out 20 invites to my clients, but only 85 to old leads from my workshops last year. As of today, Thursday the 21st, I have 27 people coming from my dinner, lunch, and learn. I thought I'd get 8 or 9. So that is a good, what Rick did a good job of there is, guys, you got to compound your marketing. So you need to keep the names of all the people that you marketed to the previous year. We've got other events besides the outside box that you can offer them the following year. And we've had, so kudos to Rick for keeping track of those people and then following up with another offer the following year. And that's a very inexpensive way. I mean, if you think about it, probably cost him, what, 100, so it cost him like 50, 60 bucks to get 27 people coming to his dinner. I mean, 50, 60 bucks in mailing to get 27 people coming to his lunch and learn dinner. So kudos to Rick for keeping a CRM with all of his past people that are on his marketing, or that he's marketed to. So guys, you need to do that, please. So today we want to talk about home insurance, which is boring, but unbelievably important for a number of reasons. Now, we don't sell home insurance. We do not sell home insurance. We do not want to sell home insurance, and that actually is a leverage for us when we do the umbrella liability insurance, where we're saying, oh, you should go back to your guy. But we can use home insurance an awful lot. First place we're going to use it is with a script where we tie the power of attorney to everything. We can tie the power of attorney to Social Security, IRS, health insurance, home insurance statements. And when do we use that tie the power of attorney to everything? Well, we use it for when people come in and they just want us to look at their power of attorney and they don't want to show us any of their statements. So as you see here, if they don't want to give us the statements, we're going to use that tie the power of attorney to everything script. And since we're talking about home insurance, they're going to bring in their home insurance, we need to know how to utilize or look at what to look for that. And also we use the tie the power of insurance, or sorry, power of attorney to everything when they're not sure about moving forward. Do they want to go through the process? So the tie the power of attorney to everything walks them through a scenario where they're like, holy cow, we are in deep doo-doo. We need you to look at these things right now. And it's also an excellent elevator conversation. So please make sure, if you don't know the tie the power of attorney to everything, that you start to learn that. So it's in the training scripts and audios here. You see the training scripts and audios. Now, if you look at the agreement meeting, first part is take control, which is about 20 seconds long, setting the tone, which is about 30 seconds long, so it's about a total of a minute right here. And then you go right to the fact find. So you're going to take control, set the tone, go to the fact find. Where you would actually use the tie the power of attorney and everything is if they just wanted you to look at the power of attorney, didn't want you to look at anything else, or they didn't want to give you statements, or they didn't want to move forward by giving you that information. That's when you would jump into the tie the power of attorney to everything. So if you're getting them to give you all the statements right now with no problem, then you're just going to move on to the fact find. It's only if they're balking at giving you that. But I've had a lot of guys that are doing this now saying, well, Mike, we're asking for the home insurance. What do I look for in the home insurance? So I want to go through that today, and I think you're going to find a lot of things that you weren't aware of with the home insurance, and a lot of things that your clients aren't aware of. So let me ask you a question. Why is the covering home insurance so important? I mean, why is knowing this stuff so important? If we don't sell it, why is it so important? Risk management, absolutely, Eric. House. Disarm, Bert, you got it. What do you mean by disarms prospect? Yeah, we're certainly getting on their side, but why are we getting on their side? Why would we? We're not talking about the money fern. Exactly. They don't know the topic. I'd go along with that, Barry. There you go, Gary. It's no cost value added service, and we're not selling. We do not sell property casualty, so we look like what when we actually cover these things that their property casualty isn't covering. So for all these things, it disarms the client. It shows value. It shows that we care. It shows that we're different. How many other of their brokers are talking about these things? None. Total advisor firm. I totally agree with that. So here's what we need to understand. Home insurance has gone up over 69% over the past decade. Rates are now 69% higher than they were just 10 years ago. That's a lot. But here's the thing. A lot of things have been happening under the radar. So have you seen where like the potato chips and things like that, potato chips, pancake batter, they're the same price as they were a year ago, a year ago, 2 years ago, 3 years ago. Why are they the same price? How can they keep those prices the same? When everything's going up, Gary's got it, smaller packaging. So guess what insurance has done? They're starting to hide these things in smaller packages, meaning that they've started to hike the deductibles. They started scaling back in coverage, and they started adding new restrictions. And these are things that nobody even knows about. Why does nobody know about these things, guys? Why does nobody know about these things with their home insurance? Small print, exactly. Exactly, Fern and Barry. Small print, and they send it to you once a year. They send you your package once a year for your home insurance. It's about 30 pages long, and how many of you have ever read your home insurance from cover to cover? I mean, I haven't. But I am going to now after doing research for this coaching call, and you'll see why. See, the coverage used to be very, very similar, but over the last 10 years, the coverage is varying widely. I mean, you're going to see some of these things are night and day difference between policies. But unfortunately, how do people shop for their home insurance? How do they shop for their home insurance? Well, they shop by reputation, right? They want to make sure that the price, I would agree, vary price, and then also reputation. They want to make sure they get as cheap as possible, and they also want to work with a company that they recognize or that they trust, most people, especially for home insurance. Car insurance, you're required by law to have that, so some people would just go ahead and get the cheapest insurance possible just to be insured. But with home insurance, again, if you have a home, you're generally going to be a more responsible person, and you're going to look for a home insurance that will actually cover your home if something happens to it. So it's reputation and price. Unfortunately, though, how many people actually do a side-by-side comparison policy-wise? This policy versus this policy, or do they just go to a home insurance guy and say, I need insurance, and then he says this is the one I'd recommend, and we're off to the races? How many people do you think? Yeah, number one, Rick, exactly. Very, very few people will basically look policy to policy and go side by side to see how things are covered. Yeah, that's right, Barry. We hope the agent does it. And knowing what you know about property casualty people, what's the likelihood they have done a side-by-side comparison? So I got 1, 0. Does anybody disagree with that? I mean, property casualty agents are what? Well, a lot of them are captive, Barry, exactly right. But they're also order takers. I mean, do they really go out and research these things, or do they find the policy that they like and then sell it to everybody? They're commodity brokers, exactly right. So because people aren't looking at these things, that can be a real problem. Because we think things are going to be covered, but they might not be. And guys, when it comes to our home, how much do things cost to repair when it comes to our home? A mistake on your home insurance can cost you tens of thousands of dollars. Not thousands of dollars, tens of thousands of dollars. And we're going to talk about that here as we go through here. So the insurance companies, they don't like property casualty insurance anymore, because in the last 10 years, the average home insurance company has lost money. Now, for years they made money, but over the last 10 years, the average, I mean, it used to be that it was an extremely profitable type of insurance, but over the last 10 years, the average company has lost money with property casualty. A lot of it has, and that's according to the National Association of Insurance Commissioners. Some of the problems we're seeing is this. There were 953 major weather catastrophes in the last 5 years. The previous 5 years, there were 602. In the previous, there were 602. And the payouts are double what they were just 10 years ago, meaning that the weather events have caused much more damage than they used to cause as well. So I don't know whether climate change is occurring or not, but there's one industry that totally believes in climate change, and guess what industry that is? I mean, if you go to any corporate office of any home insurance company and ask them if they believe in climate change, guess what they're going to say? 100% they do, Gary. Exactly. That's right, Barry. 100% they do. But here's the thing. How can they handle it? So if they know this stuff is coming, how can they handle it? What can they do? Over the last 10 years, they've raised the rates 69%. But guess what a lot of state insurance commissioners have told the insurance companies now? You can't raise rates anymore. So they used to just raise rates now, but the insurance commissioners have to approve the rates for each state, and they've said, no more rate hikes. So yeah, that's exactly, Matt, what happened is now that's why all these things are happening under radar. They're not raising rates, they're just hiking deductibles, scaling back in coverage, and adding new restrictions. So you need to read the small print on these things. If you do not read the small print on these things, who's going to protect you? If you do not read the small print on your policies, who's going to protect your clients? So it's your job to look at your own life or home insurance. But my belief is if we call ourselves financial advisors, it means we should be what? So I want to see some answers in this. If we call ourselves financial advisors, it means we better what? Let's see some answers on this. Advising about what? Financial issues. Would you classify something that costs your clients tens of thousands of dollars a financial issue? I would. So if you're not looking at this kind of stuff that we're talking about here, guess what? Then if all you're looking at is their investments, what are you? Are you a financial advisor if all you do is look at their investments? You're a broker. No, you're a financial salesperson. And I'm okay. Hey, am I okay with somebody that just looks at investments if they call themselves a financial salesperson? I am totally okay with that. What I have a problem with, and the reason we have the 21-point checklist, is for financial advisors that call themselves financial advisors when all they're doing is what? Selling financial products. Can't do that. You got to either help them or not help them. So let's look at some of the ways that they have started to change these policies. One of the things you have to understand, and I'll give you a personal experience of this. I have a vacation house, and for 30 years this event has never ever happened. But last year, the water table rose, and we got 8 inches of rain. So my house and I think they said like 36 other houses in the county, the water table rose to the point where it came up through the floor. We had actually 2-inch fountains coming up through our basement floor. So our whole basement was ruined. $35,000 later, how much of that was covered by insurance? How much of that was covered by insurance, do you think? Zero. Zippo. Nada. Not a single penny. Yeah, it was a flood. Even though it wasn't a flood, there was no flood. It came in from the bottom up, not from the top down. There was no flood, but they classified it as flood. So there was no coverage there. So water coverage has gotten really dicey with these insurance companies. So for example, if a shower pipe bursts behind a bathroom wall, are you covered? If a shower pipe bursts behind the shower, Rick says, got a lot of yeses. Well, no. I got some nopes. I got some yeses. Well, you're both right, and we're going to see that here in a second. You're going to see that here in a second on how they cover that. The one thing they're worried about is this, mold damage. Because what are you really worried about with water? What can cause a huge amount? I mean, compared to a burst water pipe and changing some drywall out, what's way worse than that? So we got 2 things with water. Water damage, and we also have the mold that can be caused by that. So when we look at the mold coverage, there was a $30 million lawsuit here back in 2001. And after that happened, guess what all the insurance companies went back and did? After that $30 million mold lawsuit, they all went and changed their mold coverage. So when this analysis that I'm looking at, they analyzed 60 different home policies, and they found that mold coverage was capped anywhere between $2,500 and $50,000. Guys, is that a small difference? Is that a small difference? $2,500 to $50,000, is that a small difference? That's a huge difference. That is a huge difference. And what do you think if I asked these 60 people what their mold coverage was capped at? How many of them do you think would know what that was capped at? None. Exactly. A third of them didn't offer mold coverage at all. How many of them do you think would be surprised that they didn't have any mold coverage? So this is, I mean, this is problem. Is this not, or is this, or is it? Because if you have mold damage, you're talking about how much in repairs, guys? For anybody that's had mold damage, how much are you talking in repairs? We're talking about tens of thousands, exactly. So, but just straight water damage, here's what they found. They went and looked at the policies, and they found that over the last 10 years, 9 out of 10 home insurance policies have significantly, not mildly, but significantly changed their water damage. And I want to give you that example. We'll go back to the leaky pipe behind the shower. So is it yes or no? Here's the difference. If it's happened 14 days prior to you reporting it, guess what? For most companies now, if this happened 14 days prior to you reporting it, guess what the coverage is? Disqualified, not covered. Exactly right. So let me give you just a horror story that happened to this couple. So it's talking about this couple in Florida. And the insurer, they were suing a Florida insurer over its refusal to pay for a burst shower pipe in her late mother's condo that caused an estimated $35,000 in damage. Again, tens of thousands. $35,000 in damage in 2011. 3 weeks later, an engineering firm hired by the insurer found that the plumbing had been leaking for more than 14 days before it burst. By that time, the damage was so old it was impossible for her to dispute the firm's findings. So guess what? How will that affect your clients if they lost 35? Again, the pipe burst, they found it, but they said, the engineering firm said, well, no, this had been an ongoing problem. So even though they found it as soon as it burst, because it was an ongoing problem, guess what? No coverage. $35,000 in damage that was not covered. Is that a little thing or a big thing, guys? That's a huge thing. So what's the solution for this? Well, first of all, the first solution is to what? What do you think the first part of the solution is? Know it. Exactly, John. Understand what you have. Understand what you have so you're not thrown a curveball. If you decide that this is an issue that you want to insure, they always let you add a rider to give you more water coverage than you already have. But guys, living through it over the last 6 months, you gotta know what's covered when your water damage and what isn't covered by water damage, because it's not a $2,500 fix. We're talking tens of thousands of dollars, and that will severely hurt anybody. Well, see, but the problem is you get flood insurance through the Fed, but so what? I was not in a flood zone. Dude, I wasn't in a flood zone. I had another house about 15 years ago. I was sitting on a hill, and it rained so hard the water filled my storm, what do you call it, the windowsills in the basement, and flooded my whole basement. So they're not going to give me flood insurance on a hill. Yeah, so the thing is, if you don't understand what you have, you better walk through and make sure they understand what it is that they have. And I'm going to talk about because you don't want to become necessarily an expert on home insurance, but should you be holding their home insurance salesperson accountable? That's our job, right? Is our job to actually sell them policies? No, our job is to see if there's any problems and then send them back to who? Their guy. Just like with the powers of attorney. Our job is not to do powers of attorney to them. It's to find out any problems, send them back to their guy. See, we used to think our home, and it used to be this way up to 10 years ago. See, there's been a lot of changes with powers of attorney in the last 10 years. There's been a lot of changes with home insurance in the last 10 years. Over the last 10 years, basically, home insurance did cover. If something happened to your house, it was covered. But because the companies have lost money on average over the last 10 years, guess what? That's no longer the case. It's no longer the case that if you have insurance, you're going to be covered. Let's talk about another thing here. If there's a big storm, so if there's a big storm and it wipes out your neighborhood, how many roofers are there in your neighborhood? How many roofers could handle a neighborhood? If there is 150 houses that need new roofs, how many roofers are there? So there's a thing called demand surge. Right, Matt, just a couple, right? There's maybe 5 or 6. How many? And how long is it going to take for them to get to your roof? So the way, another thing that they have now that they do not cover, yes, Barry, shortage of labor and supply versus demand, Matt. Exactly right. So let's say that my roof would normally cost $15,000 to repair. But because there's so much demand, they're charging $20,000. So guess what has to get, and the insurance company says, no, that roof is only $15,000. Well, what good is the roof being only $15,000 if I can't get anybody to repair it for $15,000? Everybody that was repairing it, I'm being quoted at $20,000, $22,000, $25,000. Will they find the difference? Will they find out the difference? No. Well, then I got one wise ass saying that there's 100. There's 100 roofers out there, right? Here's the other thing you have to understand. If you go hire one of the 100 roofers that run into your area when there's a big storm, will the insurance companies cover Joe Bob that comes in and says he's going to repair your roof? So you don't want to be stupid either, right? So it has to be a qualified roofer. And how many qualified roofers are there in a neighborhood? So guess what's going to happen to supply and demand? So that no. Somebody said only if it's replacement cost. Don't you get this, guys? Demand surge. Even we're going to talk about replacement costs here in a second. But replacement cost says that we're going to pay you what it costs to get it replaced. But the insurance company says if it's $15,000 to replace that's all they're going to pay. If the demand surge causes, because the supply and demand causes people to be charging $20,000, $22,000, $25,000, guess what? Is the insurance company going to say, okay, I'll pay for the replacement cost? No, guess what they're saying? Yeah, roof extortion, right, Casey? So this is something that most people don't even, I didn't know about until I was researching this. So if yours is the only roof in the neighborhood that got hurt, that's fine. But if there were many houses that got hurt, guess what? You're going to be stuck. And you're going to be stuck with stuff that's not covered by the insurance company, even if you have replacement costs. You get that? But again, you can add a rider that will pay for demand surge. Whether it's worth it or not, I don't know. But again, we're not here to tell them what they should do. We're here to tell them the questions they should ask to make sure they're not blindsided. Make sense? See, the insurance companies are looking for all sorts of ways to reject. 10 years ago, if you had a problem with your house, boom, they paid it out. But since they've been losing money on average the last 10 years, they're looking for every reason possible to not pay out on claims. I'll give you another example of that. They have the 6-month rule. If you don't get it repaired within 6 months, they're not paying. And you think, well, who wouldn't get their house repaired in 6 months? That's crazy. Well, let's go back to if it happens to a whole neighborhood, and there's only so many roofers, only so many basement people, only so many whatever, could it be that it's going to take you 6 months to get your house? Oh, Rick's saying that he actually had to fight for 3 months. So it can be even stricter than 6 months. And so here, I'll give you another horror story. Is that if I can find it here? Paul and Michael were tripped up by this kind of fine print after a fire severely damaged their Long Island home in July 2008 during the Hurricane, was it Sandy? Between getting permits and winter storm delays, they say rebuilding took more than 2 years, but their Allstate policy said they had to have been finished within 6 months. The claim was for $97,000. $97,000, and Allstate said no because it took 2 years. Guys, look how many houses were having to be repaired for Hurricane Sandy. How many houses in Oklahoma had to be repaired when a whole city is wiped out? How many? David, you're worrying about something you don't need to worry about. So guys, David's bringing up a question. What do I tell? Let's see if anybody can get this. What's the one question that I don't like the advisors to ask me? What's the one question I don't like advisors to ask me? Todd got it. Well, what if this happens? Why don't I like the what if questions, guys? What if this happens? Why don't I like the what if questions? Ah, Eric got it. There are an unlimited amount of what ifs. We could talk about what if they do this, what if they say that, what if they do this, what if they do that. If we did that, how long would it take for me to handle any of these coaching calls or whatever? So let's see if anybody you got this. If you have a what if question, you shouldn't ask it until what? Shouldn't ask it until what happens? Ah, Fern's got it. Till it happens. As soon as it happens, send me in the tape, and then we'll what? After I pick myself up off the floor, then and put some smelling salts under my nose, then we'll what? Deal with it. See, you know a lot of things that your clients don't know. You know a ton of things that your clients don't know. So the thing is, it works until if it's worked 50,000 times, guess what we know, guys? If it's worked 50,000 times, guess what we know? How often does your what if come up? Because if the what if was coming up very often, what will we do, guys? If the what if was coming up all the time, what would we do? That's right. And a lot of you said, Mike, some of these scripts are so long. The beneficiary script is so long. Why do you do all these things over and over and over? Because we're overcoming 3 objections we commonly get. So what we do is we overcome the objection before it comes up. We overcome the objection before it comes up. We overcome the objection before it comes up. So if this is a problem, of what if is a big problem, we would have already what? Fixed it. So that's a little sideline to this. So do you get this, guys? Again, 6 months, what could happen if the whole neighborhood was wiped out? Could you necessarily get all the repairs done in 6 months? Could you? No. And then you could be what? So what good is it if you're what good is it if your client is in court then for the next 3 years trying to get the insurance company to pay? Even if they get it paid, how much time and effort does it cost, an attorney cost, did it cost to get that paid? If you're lucky enough to get it paid. Wind damage is another thing. Wind damage is another thing that's a big problem. Because guess what insurance companies have started to do with wind damage? Guess what they've started to do with wind damage? Your normal deductibles don't apply to wind damage in 19 states, and that includes tornado and hail damage as well. So instead of the normal deductible, they're going to hit you with a 2 to 5% of home value. So in a $350,000 home, that could be $17,500 in deductible. How many of your clients do you think are aware of that? Were you aware of it? I know I was not aware of it. Most of the stuff I'm covering with you today is news to me. So doing research on this, holy cow. So how much value could we give to our clients if they didn't know these things? Tons of value. And again, do we sell it? No, we don't sell it. So what kind of credibility does that give us when we bring this stuff up? What does it make us look like? What does it make us look like? Exactly, experts, heroes. So this is something Bert was talking about earlier, actual versus cash value. So many people have had their insurance change from replacement cost to actual cash value, which means it's deductible. So if your roof is 10 years old, they used to just replace the roof, but what they've done is they've changed it from replacement, where they used to just replace the roof, again, not including that demand surge, they used to just replace the roof, back to actual cash value. And that means is they're going to look at your roof, then they're going to depreciate your roof, or they're going to look at your siding and then depreciate your siding. And they say it's 10 years old, so we're only going to give you 50 cents on the dollar. Again, what would that add up to? Little or a lot? And they've changed this. This is how they've changed it. On your annual renewal with your home insurance, they send you that 30-page thing, and in there it says, we've changed this. If you have any problems with that, give us a holler. Well, if you don't read that, guess what? You're stuck. You're absolutely stuck. So we can help them with these things. If we cover these things, and again, we're not going to fix them. We're just going to bring these things to their attention. But when we cover these things, we look like heroes and experts. And one of the ways you can do it is with these property casualty checklist coverage, and you can just hand this to them at the 21-point checklist. You can hand them the property. You can talk about some of these problems, and we're adding with the. Remember we talked that we're going to be modifying or actually updating the 21-point checklist. This will be added to the in 3 months or so when we update everything software-wise. We will be adding this to it, so it'll be in there. Now I'm going to bring up something here. I've had people say to me, Mike, can I just, we're printing a lot of pages for these 21s. Can I just print one and then just show them the things in there? Guys, if I had the choice of having the 21-point checklist be 21 pages long versus 100 pages long, which would I choose? 21 pages versus 100. Okay, we got 1 right answer, 2 right answers, 3 right answers. All right, great. So all the smart people, we got 1 that did it wrong. So all the smart people who understand psychology say 100. I've got a couple of 21s. So some of you 100 people, why would you want it at 100? More value, Brad, more for them to see. They actually did here's the thing, they actually have done tons of research on this. If they have 3 identical pieces of paper, 3 identical surveys. They hand one to a person, they hand just the piece of paper to a person, to a bunch of people, right? They hand a piece of paper to a bunch of people. Then they hand that piece of paper on a clipboard to a bunch of people. And then they hand that piece of paper on a really heavy clipboard to a bunch of people. Guess which one the people rated as the most important piece of paper, even though they were all identical? The heavy. The heavy, exactly. So we want, there's a purpose for the 100 pages in there. Do we go through and read all 100 pages to them, guys? Do we even read anything from the 21-point checklist to them, guys? If you do the 21-point checklist right, are you reading anything in the 21-point checklist to them? No. So is it easier to sell the tangible or the intangible, guys? Is it easier to sell intangible or tangible? Tangible, exactly. So what is the 21-point checklist? Because what we do is intangible. So what does the 21-point checklist do? Makes it tangible. And the heavier it is, the better. So, because Missy has fielded a lot of questions from people saying, you know, these are kind of long and I hate printing all this stuff and blah, blah, blah. Dudes, get your minds right. Get your minds right. The more, the better. The more, the better. So when we add this, the 21-point checklist, we're not going to make it skinnier. We're going to add things to it. And that's a good thing or a bad thing? Good thing, exactly. Make sense to everybody? Okay. And where can you find the property casualty list between now and then? If you go to the Property Casualty Lunch and Learn, Property Casualty Lunch and Learn, under Marketing, Lunch and Learns, Property Casualty LNL. If you get down to number A4, there's a Property Casualty checklist. So between when we, it's costing us $100,000 in about 3 months to update the software and our website since the the operating system that's on is no longer supported, so we have to go back and do that. So it's going to take a long time to do that. So between now and then, you can actually just go to the Lunch and Learn, Property Casualty Lunch and Learn A4 Property Casualty checklist and just print that out for your clients. Make sense? So I know this is not something you're used to doing, but is it helpful? Is this stuff helpful for you to know versus all of your competitors? So I would go back and watch this on a regular, until you understand this. There's no script for this. Just letting clients know the changes makes you look, and again, you also want to make sure before you even bring up this property casualty stuff, you want to make sure that your clients understand that you don't what? Don't sell it, exactly, Barry. So make sure they understand you don't sell it, but then you bring it up, and then at the end, you always want to ask them what? At the end, when you cover the home insurance and the problems with it and the things you need to be aware of, what do you say at the end? It's a one-word question, or I guess it starts with a W question. Why is this important for you to address? Why is this important for you to address? Because if they tell you it's important for you to address, and again, are you going to give them that property casualty checklist at the 21-point checklist meeting, guys? You hand it to them, and then you what? Once they've told you how important it is, you take it back. And again, we have a script for how to deal with it when they want all the things, that when they want the survivor's guide and the property checklist and the quality of life, when they want the 21-point checklist, we have a script on how to deal with that. But we talked about this here, I think about a month ago on a Friday call. If they ask for these things at the end of the meeting, did the meeting go well or poorly? If they ask for these things at the end of the meeting, did the meeting go well or poorly? Yeah, we have a few newbies that said well, and that's the wrong answer. So as a new person, that's a common mistake you would make. It went poorly. So why did it go poorly? If they want this stuff, why would we classify it as going poorly? Because they are then what? They think they have problems. Yes, good job, everybody. At the end of the meeting, the only problem they should be thinking about is what? The property casualty list, the quality of life directive. What should they be thinking about? Changing their advisor. If they want to change their advisor, they know if they move to you, you're going to what? Give them all that stuff. So you want to get really good at the 21, not showing them how you want to make sure they want all these things, but by the end, because they are at the beginning, this should be at the beginning of the meeting. It's the non-financial portion of the meeting. By the time you get to the end, they know they're going to get all those things when they work with you, but that to them at that point is the smallest of their concerns. Their biggest of the concerns is they can't stand their guy. They can't stand working with a guy for one more minute. And you look like a knight in shining armor. Why? Because of all these things, including the home and property casualty insurance that nobody's ever covered with them before. Make sense? Any questions? Concerns? Super duper. Then you guys have a wonderful week, and we'll talk to y'all on Friday. Thanks, everybody.